Okay, welcome to another edition of Wilson's Weekly. We've been missing for a couple of weeks, but we are back. I'm Alex Hyndman-Hill, and I'm joined by the one and only Doc Wilson, who's going to take us through everything that's been happening, especially after yesterday's announcement by the RBA. How's it going, Dr. Wilson?
Yeah, good, Alex. Good to speak again. And it has been a big week, of course, punctuated by that announcement yesterday. Probably no surprise that we did see a rate cut. It's been widely forecast in the media and by the experts that we would get a cut. In fact, some of the banks were predicting a full 0.5% cut. We got half of that, but nonetheless, or 0.125. So, but nonetheless, a 0.25.
For, but
well, yeah, I think that was wishing and a hoping and a praying from the banks.
Wishing and a hoping and a praying. What does it actually mean? What does it translate to? I mean, this is the first time in a couple of years that it's been this low, but what does it actually mean for us all?
Well, it's positive news all around. Typically, when we do get interest rate cuts, it's sort of bad news because it means that we need to kick the economy along a little bit. We need to put our foot on the gas because we're slowing down. And that's what we've seen in previous big commencements of easing cycles. We go back to the GFC, the global financial crisis, the end of the mining boom, of course, COVID as well. We had to cut rates because there were concerns over the economy and how it was performing. Of course, lower interest rates puts more money in consumers' pockets. They pay less with their mortgages. Businesses can borrow more because they have lower interest rates, and it generally improves confidence as well. So we go out there and start spending. We've got extra money in our pockets and businesses start investing. And of course, they reap the benefits of increased demand from consumers. So that's why we have monetary policy. It's to kick the economy along when it's slowing down, when it's cooling off. And we put up interest rates when the economy is going a little bit too hot and we need to slow it down because inflation's rising. That's why it's a little unusual, Alex, what we're seeing at the moment, because really all indicators are very strong in terms of our economy. We've got some international concerns, but particularly over the US tariff policy, but that's starting to fade into the background a little bit now. Share markets picked up. It was very volatile given, the types of signals that were coming out of the US, particularly in regard to tariff settings over the last month, but settled down now and growing. So I guess that's a reflection of how consumers are feeling. But of course, we're focused here on the housing market, and lower interest rates are unequivocally good news for the housing market.
Does that translate to more buyers and better ability to service mortgages? And is there anything else? What else does it kind of lead to? Does it mean loads more people are going to be selling and buying?
Well, obviously, it improves affordability because with a given income and a lower interest rate, you can actually go out and pay more for a property. So it elevates you in terms of your buying capacity. And we, as we discuss here frequently, Australia's housing markets are typically characterised by, too much demand, not enough supply. We just don't have enough houses to go around. So when we make in that short environment where we have a shortage, where we make it more amenable to buy a property, it can only mean higher prices. And we're already seeing that, Alex. Of course, we had an interest rate cut back in February, and we're seeing house prices certainly increase almost every capital city since then. Now, this will just add fuel to the fire.
Take us through all your stats then. What have you got for us this week?
Well, I've sort of blown it all away already, haven't I, Alex? But that's okay. But we do every week bring you the latest in what's happening in the housing market, my housing market, in conjunction with the good folks at Infinity. What we try to do is keep you up to date with the key drivers of the housing market, not just houses, not just prices and rents, but also those underlying drivers such as interest rates, of course, which are important to the housing market, as we just explained. So we're trying to, give you the latest information as it comes out. Our comments here are evidence-based, so it's not just, let's throw out some clickbait and get you to, be interested. It's about supporting our point of view with facts. Yeah. So that's what we do, and we do it every week because, let's face it, if you're a buyer or a seller, you want to be informed, don't you? Because we're not talking sheep stations here. We're talking a very big investment focus. Your house is probably your biggest purchase of your life. So you want to know what's going on in real terms, not just in terms of factual terms, but also the latest information you can get. And unfortunately, there's a lot of misinformation around housing market insights, because of course it does garner a lot of attention. So it's a fertile ground for clickbait.
That's why people help you, because this is where you get the actual real data.
That's right. So it's a bit of a clickbait-free zone, wouldn't you call it, Alex? So let's get on.
Let's clickbait to get people in who maybe haven't joined us before, but the actual information is clickbait-free. Yeah.
Well, we hope it's clickbait, but for the right reasons. All right. Yeah. But we stand on our reputation, and that's been pretty good for quite a while. So moving on, let's have a look at what this week will bring us. And we're, gee whiz, 3/4 of the way through May. Wednesday, the 21st, up the data up to then. Of course, that does bring us that latest RBA decision for May. And we're going to look at that decision. Also, the latest labour market decision, which is a bit about interest rates as well. And as I said before, it's a little unusual to be cutting interest rates consistently with such a strong economy. And the labour market is a key to how our economy is performing. So we'll have a look at that latest data. And also, as usual, the latest weekly auction results, which give us a sort of an insight on a weekly basis as to how specifically capital city housing markets are performing. And we know that auction clearance rates and auction activity is a very reliable forward indicator of what's happening generally in our housing market. So let's get started. We've had a big intro and the clock's ticking. So we'll start with those RBA cuts yet again over May. It followed, of course, the February reduction, which was the first cut in a number of years, widely expected because we have got inflation under control, but rates were cut by 0.25% again. The official rate is now 3.85%. And as I said, we cut those rates despite a continuing strong labour market, which we'll look at shortly. Retail sales are surging and wages are starting to rise again. So really no bad news about the economic performance at the moment. But hey, let's enjoy it. Strong economy and lower interest rates. Does it get any better than that? And I'm sure that the housing markets and home buyers and sellers, particularly home sellers, will be enjoying that the fruits of those lower interest rates, which will likely mean higher prices. So, and of course, lower rates only exacerbate the strength of the economy. As we discussed before, that encourages consumer activity because they've got more money in their pockets. Similarly, so that means that businesses reap the benefits of more demand, and it also adds to confidence. We feel good about those positives in terms of our personal balance sheets. And as we've seen with retail sales recently, consumer activity is still pretty robust. So, and of course, as we mentioned, that rate cut is a clear stimulus to housing markets. And we have seen home prices in most capital cities, particularly Melbourne, accelerating since February. But we'll look at that. Well, are we back yet? Well, we just might be able to say that, and we'll look at some data in terms of auction results to discuss that Melbourne market. But certainly, lower interest rates will add to the momentum that we are seeing develop in the Melbourne market. And hey, Alex, as we keep saying, it's well overdue, isn't it? Been a pretty slow market for a couple of years. Maybe it's now back in town. So the RBA, in its commentary yesterday, said that it believes underlying inflation, and that's its key measure, and a particular focus for its interest rate policy, is expected to be around the midpoint of the 2 to 3% target range, which is what it aims for throughout much of the forecast period. So it's pretty confident that inflation will stay where it is, and that's why it decided to ease monetary policy. The other thing about cutting interest rates is, if people are starting to spend more in an already strong economy, hey, that might mean higher prices generally. So that's not going to help them. Well, it's not going to help them with their outlook, but we'll see what happens there. And it's now saying that monetary policy is now less restrictive. So it's sort of identifying that it's not, the interest rates aren't restricting the economy as they were designed to do with high inflation previously. So it's a little bit saying, well, maybe there's not a lot more interest rate cuts to come. But the big picture is that it does remain cautious about the outlook. So, yeah, it's not really giving us any strong indications of where it feels things will go. And of course, it is a hostage to what's happening internationally. And as we've seen with that, with the issues over tariff policy out of the US, there is a lot of uncertainty in regard to the impacts of that. But at the moment, that's settled down. So let's celebrate the good news, lower interest rates again. And we'll start thinking about whether there'll be another interest rate cut over the next month. Not sure about that.
I wouldn't predict that.
No, we'll wait and see what the data says. And we've got inflation data coming out this week, which is important, just the monthly inflation data. So we'll discuss that in next week's show, Alex, just what's happening with inflation, because that's been a great forward indicator in terms of the prospect for interest rates, our discussions on the inflation rate as we do every month. So there's the chart for the official RBA rates. You can see we've definitely ended that easing cycle now. It was flat all last year. It rose, of course, through 2022 and into 2023, flat through 2024. And hey, now we've started to cut rates going forward. I'm not sure how consistent that cutting cycle will be in terms of more reductions. But as I said, typically reductions are a bit of a bad news story because as we saw through COVID, we have to cut rates when we need to stimulate the economy. It's interesting, Alex, and I'll just finish off on this, that the US Fed, of course, who's been dealing with high inflation, has been cutting rates similarly to Australia. This week came out and suggested that it's going to be looking a bit more closely at the labour market rather than inflation going forward. So it's now, I guess, saying, well, we're not that concerned about inflation in terms of setting monetary policy where we do interest rates, but we're going to start looking at what's happening in the labour market. So, and that's really what we have been over the years have been more interested in, particularly over the past couple of decades, is how labour markets performed. Reserve Bank boards have been more interested in that rather than inflation. But inflation, of course, has been a big problem over recent years. We seem to have beaten that one. And now we're getting somewhat of a reward with lower interest rates going forward. But on the labour market story that the US are going to look forward to a bit, or look at a bit more closely going forward, according to the head of the Federal Reserve, we'll look at our labour market and, hey, it's still strong, Alex. It's holding steady. Unemployment rate at 4.1% over April, exactly what we got over March. It's interesting, the labour market just started to show a few signs of maybe weakening in recent months. We saw actual jobs fall over February, seasonally adjusted jobs, but it's bounced back, and we saw a really big pickup in jobs growth over April. 89,000 jobs created. Unemployment numbers were up a bit, 6,300, but that's a big rise in the number of jobs created. And the participation rate, which measures the level of people getting jobs out of those that could get jobs, so that's the potential workforce versus the actual workforce, we're back to a near record 67.1%. So that's very high. That means we're still dragging people into the workforce. People who might be self-employed, people who might have retired, are now finding, a lot of work or finding jobs that is attracting them back into the workforce. And that's what pushes the participation rate up. New South Wales and South Australia were the lowest states for jobless over April at 3.9%. And of course, as we've already mentioned, lower interest rates are going to continue to support what is still a strong labour market. And you can just see how strong it is when we look at the chart there, because we're still at 4.1% where we've been for most of the past year. That's a low rate. And we can sort of validate that by looking back to the period of the noughties. Don't we call it the noughties prior to 2010 and between 2000 and 2010, the noughties? Sounds a bit strange, but anyway, we'll go with that. But it's not too far above where we were then, and that was our strongest, one of our strongest economic periods, very strong mining boom. So when we look at the history of the unemployment rate, that's very low still. And given we have a record participation rate at the moment, it sort of validates saying this is one of the strongest labour markets and therefore one of the strongest economies we've had. And we're cutting interest rates, which is good, as we can see there. South Australia, New South Wales, the lowest of all the states in terms of the unemployment rate over April, and the rest of the states at 4.2%. So there's no real, I guess, a standout leader or a laggard in terms of how the states are performing with the unemployment rates. And Western Australia, that strong economy there, of course, produced the most jobs over the past year, up by 3.1%, with Queensland the underperformer, following some very strong jobs growth in Queensland over the past year or so, just down a little bit, up by 2%. So that's it for our economic news this week, Alex. Interesting stuff, of course. Interest rates are relevant to all homeowners in the sense because they make, in an undersupplied housing market as we have, they make property more affordable. Therefore, that acts to push up prices. And we've already got confidence in the market. That's the point. We don't need to say, okay, we'll get a cut in interest rates and that'll help people, feel a bit more confident about the housing market. We don't need that because housing markets are generally pretty confident. And it's really only been that Melbourne market, as we discussed, it's been dragging the chain. But recent signs are pretty positive regarding the Melbourne housing market. And we'll look at some of those signs with this week's auction clearance rate. So we've got rid of all the holidays. We've got rid of the election day. So all those distractions of the past week, 6 weeks, are behind us. It's been a remarkable period. We had a late Easter, Anzac Day straight after that, and then election day straight after that. So finally, we've got what you might call a normal housing market environment in terms of particularly the auction market. And we're now starting to see some, more consistent results reflecting the fact of that sort of normal environment. And guess what? The Melbourne market continues to lead the auction results. Now, we had it headed on top a couple of weeks ago. Thought, oh, yeah, well, that's okay. First time in a while, Melbourne had the top clearance rate. But then it followed it up the week before last, with another top performance. And guess what? 3 in a row now for Melbourne. And Melbourne's now tracking well ahead of where it was a year ago. And it's now at its highest level for a couple of years. So it's not just a one-off, Alex. It's actually some consistency. Yeah. Now, of course, we've got a few more weeks left in May, and then we're into June before we get that King's birthday holiday, the beginning of June, another holiday. And then we sort of keep moving along until July hits us, and then it's the winter freeze, and we all forget about property for a while. But so we've still got some time to run with this end of autumn selling season market. So it'll be interesting to see if Melbourne can keep its lead over that period. So, but it has been recording the highest clearance rates from the highest listing. So let's have a look at the results for last week. 667 auctions in Sydney, around about the same as the week before, and clearance rates a little higher in Sydney, but Sydney's just kept on keeping on with those low mid 70% results, which is clearly a seller's market in Sydney. Tracking about the same as where it was last year, although auction numbers still a little low, but I would suggest that's still a bit of a hangover from the election week. Melbourne auction numbers up, but another very strong result for that Melbourne market. The top result, 74.1% of all the capital cities, similar to the week before. And you can see it's tracking 10% higher, the clearance rate, at where it was a year ago, even though, as I said, listing numbers are down. And I think that's still a bit of an overhang from the election period. So we'll wait for next week. Brisbane up over the week with 124 auctions, similar clearance rate. We always see Brisbane around about 50%. It has a different auction culture to particularly Melbourne and Sydney.
Not quite as many auctions in Brisbane as there are in Melbourne and Sydney.
No, and the Brisbane agents tend to treat auctions as a bit of a part of the private treaty sale process. So it's like, well, you go to auction and who cares what happens, because then we go, well, we do care, but then we go to private treaty anyway. So whereas in Sydney and Melbourne, you got to sell at auction because that's the whole plan, right? A little bit different in Brisbane. But the interesting thing is that Brisbane clearance rates, which are sort of normalising now for that Brisbane market, are well below where they were a year ago, where they were pushing at record levels over the beginning of last year in Brisbane. And we know that was a very strong market because it was recording extraordinarily high prices growth.
Leveling off a little.
But still prices growth in Brisbane, but not at the rate that we saw recently. So Adelaide, similar auction numbers. Adelaide's been a little bit of a weakening market, whereas Melbourne's been strengthening. Adelaide's been weakening. It was very strong a year ago. Look at that 80% clearance rate in Adelaide a year ago. And Canberra just continues to be the relative underperformer. We've sort of been talking a bit about Canberra reviving similar to Melbourne, but we really haven't seen that revival in Canberra. Canberra typically used to track the Sydney market, but it's really detached from the Sydney results recently over the last year or two. And again, really no sign of that Canberra market picking up. Now, when we look at the longer term trends, as I've said, Sydney's around about where it was a year ago, been quite strong this year in the low to mid 70s, significantly higher than where it finished off last year. Hey, look at Melbourne, will you? All this year, up around 70% clearance rates and strengthening so far and well ahead of where it was a year ago. And if you keep it a secret, Alex, I'll tell you that our spies, or not our spies, but our data is telling us that that Melbourne market prices growth is continuing to rise through May in Melbourne. So that those lower, well, no, don't tell anyone. But lower interest rates will only create even more momentum in that Melbourne market. As I said, Brisbane lower than a year ago, but this is fairly typical for the Brisbane trend in the mid-high 40s, low 50s. Adelaide's come off the boil a bit, a weakening market, but it's been a very, very strong market. Adelaide and Perth have been Australia's strongest markets for prices growth over the past couple of years, and Adelaide's been clearly the strongest auction market over the past couple of years. So maybe pausing for breath a little bit, that Adelaide market. But once again, as we've said, lower interest rates are going to help that market along. And Canberra, same old really in Canberra. It'll be interesting to see if interest rates revitalise that Canberra market. So if you're looking for the latest auction clearance rates, you can get them from my LinkedIn channel, which is Doc Andrew Wilson at LinkedIn. Every Saturday night, the headline results at 6 o'clock, and then the full national report, which includes the regional breakdowns for Sydney and Melbourne, and the top 10 sales under the hammer for each of the capital cities over the week. So get a hold of that one. And if you have missed the latest national auction report, weekly auction report, there is a QR code which will give you a PDF copy of that if you scan it with your phone. But going forward, of course, we finish off, Alex, with the great giveaway we have with the Wilson Weekly in conjunction with Infinity every week, and that's the My Housing Market Suburb Data app. So we looked, of course, at our aggregated capital city results in terms of looking what's happening in the housing market. But of course, consumers out there want to know, well, what's happening in my suburb? Well, we can tell you what's happening in your suburb exclusively here to Infinity and My Housing Market. So there's a QR code. There's a QR code you can scan, or you can click that link. But hey, there's no such thing as a free lunch. Well, it is free, but you've got to go through our folks at, or the folks at Infinity, and they will give you the password for the app. But it's well worth having.
Password. It really is. I look on it all the time. How much is it worth?
Excellent. How much? It's worth millions. Look at the price of property in Australia, for goodness sake. But you make me feel good when you say you look at it all the time. So it's what we do here is we look at the current asking prices and rents in every suburb throughout Australia. So you'll get the data for every suburb that has data. Obviously, if there's no data, you won't see your suburb there. But it is the current data. So we refresh this constantly. It tells you what the asking prices are. So you know what agents and sellers are asking for their properties right now. So it gives you a sense of what the market's asking for prices. So you can filter for price or rent. You can filter that then for either the state capital city region or the outside capital city region. So that narrows it down a bit. We're looking at Blacktown here in Sydney, which is a big suburb. You can filter it for house, townhouse or unit. Hey, how good is that? And also for the number of beds. So you can really sort of get down to the nitty gritty. And as we can see there, the current with this screenshot. The current Blacktown, well, it's a week old, but anyway, or a couple of weeks old. But it's not just the median asking price, Alex. Hey, this is really exciting now. It's also the low and the high. So you get to see the boundaries of where properties are being asking prices are. So it's not just the median, the middle, it's also the high and the low, and also the number of properties that are for sale currently in that filter. So isn't that great? The answer to that question is yes. And of course, we have exactly the same thing for the rental market. So if you want to know what rents are, if you're a prospective tenant, and you want to know how many properties are currently for rent, or if you're a landlord, more importantly, I guess, in a sense, you can figure out what sort of rent you should be asking for your property with all those filtered variables. Now, we also have investors. We have a special new data bank for investors, and which shows you the average yields or the top 10 yields in all the suburbs. Same sort of filtering process there, beds, property type, and regions. But we also show you the top 10 yields. So that shows you the return on your investment based on the current rental over a year versus the current asking price. So that's the yield. So you can see how not just how the top 10 suburbs are performing in each of these regions, but if you average them out, you can see how what the level of yields are basically on a regional area. But as well as the yields, you also get the vacancy rate. So that shows you how strong the rental market is, the number of properties for rent, and the number of properties for sale. How fabulous is that, Alex, for investors? And hey, it's just, I'm boggled. But, just get onto Infinity. For goodness sake, this is all you'll ever need, perhaps, for property. So we're not just giving you
and it's the best move that you'll ever make.
Yeah, and of course you need the Wilson Weekly as well through Infinity.
And
you'll need Infinity too, of course, without saying that, for all your financial needs. So next week, as we've already mentioned, April inflation data. We're going to look at the March quarter home loans, some interesting stuff there in terms of what investors, first home buyers and owner occupiers are doing in terms of the number of loans. And of course, as usual, the latest weekly auction results. If you missed this week's report, there is a QR code. You can get the whole thing there to browse and, play with to your heart's content. So that's all from me, Alex, in another extremely exciting show. And we look forward to the next thrilling episode next week. And it'll be good to see how that inflation data is going. And it's not just the headline data. We're also going to look at the drivers, particularly the price of oil, etc., how they're going as well, to get some sense of what the future holds. So see you all later. Good to talk again. And, enjoy the merry month of May.
Oh, you too. We will see you again next week. Thank you, everyone, for joining us. And don't miss the episode next week. Sorry, we've been absent for a little while, but we are back. And Doc's going to be back with all that info next week, as well as all the international affections that we've got going on at the moment too. Don't miss that.
Thank you very much, Alex.
Thank you. Thanks, Doc. That's great.
Yeah. Well, we got through it. I'm trying to make it quicker. But it's very difficult,
It is, especially if he's interrupting you.
No. We've got to have the dialogue. That's the whole